Hello, welcome to Forex School Uganda. I am Godfrey. Today I want us to do a quick analysis on the AUDNZD currency pair. That's the Australian dollar, New Zealand dollar currency pair, to see where it is at right now and where we anticipate it to get to in the next coming few days, especially after market open come Monday next week. So we're going to do a top-down analysis from the monthly time frame down to the lower time frames. Now this is the monthly time frame, and when you look at it, you see that price has been ranging between this low here and this high right here. Really, there's not so much that we can get off this monthly time frame as information for us to do any trading. The fact that it is ranging and there's no clear market structure, but it's so clear that it's ranging between this high right here and this low down right here. Now we're going to drop down to the weekly time frame to see if we can get any more details that can define the structure for us, that can help us to determine what positions we should be looking at taking once the market opens. So this is a weekly time frame, and when you drop to this weekly time frame, everything becomes a little bit more clearer as the structure gets more defined. We see that price has been making a series of lower lows and lower highs. It's a new lower low, and now price has just completed the formation of a new lower high. Now when price is making lower lows and lower highs, it is clearly trending to the downside, or you could call it a bearish trend. So the structure of the market is currently bearish, and so we expect this price to continue dropping off after the formation of this new lower high, and so we should expect it to drop to the downside, first of all to come and retest this low down here, and ultimately this low way down right here. And so we're going to drop down further to the daily time frame to see if it also gives us bearish vibes, so we can prepare ourselves for bearish setups come Monday market open. The other unmistakable thing to notice right here is that price just retested this broken support, now turned resistance, after a break below it to the downside. It was followed by this retracement to come and retest this broken support, now turned resistance, and we see that price closed bouncing off with a bearish close to the downside, indicating that there's bearish momentum that is coming into the market after the failure of the bulls to close above previous support, now turned resistance. It was held to the downside below the now resistance, which was previously support, and so we should expect price to continue to the downside to come and retest this low down here, and like we said, potentially this other low down here. And so much still to add to our set of confluences. We are going to use our Fibonacci tool and measure from the high of this impulsive move to the downside to come to this low right here of the move to the downside. Now you can see that currently price is testing and rejecting the 50% Fibonacci retracement level. And so now this area of the Fibonacci level, the 50% Fibonacci level, being at the same zone with the resistance area, act as two confluences that solidify our bias as bearish. And so really I don't see anything that should be holding price to the upside. I don't see anything that should be driving price to the upside. We should see a drop off to the downside. And finally, as a last note on this weekly time frame, we see that price moved impulsively to the downside from this high down to this low here, followed by this correction to come and retest this resistance right here. And then after an impulse and a correction, what do you expect to see in the market? We expect to see another impulsive move in the market to the downside, complete what we know as the impulse correction and impulsive formation in the market. So the weekly perspective is clearly bearish, and so we are going to be dropping down to the daily time frame to see what perspective we also get from it. Now this is the daily time frame. And when you look at it, you see that price has been consolidating between this low right here and this high right up here. We see that price moved impulsively to the upside, coming to this high before it started ranging between this high and this low here, until finally with this bearish candle it was able to impulsively break out of the range to the downside to come and test this low, but then it was able to retrace to come and retest a broken support, now turned resistance. You know, when price is coming out of a consolidation, chances are that it will retrace to go and retest the range out of which it broke, and you can see that it closed with this candle as an indecision candle, but with a long rejection wick to the upside. As that the bears are coming in strongly within the market, they are broken fully out of the range, and so this is a confirmation to us that the range is fully broken. We don't expect to see higher prices for now, at least in the short term. And now with this bearish close, we hope to see price continue dropping to the downside to come and retest these lows down here. Also notice how price broke strongly out of this consolidation area to the downside, moving impulsively, followed by a corrective move to the upside. And now after an impulse and a correction in the market, what do you expect to see? We expect to see another impulsive move in the market to complete what we know as the impulse correction and impulsive formation in the market. So the market is clearly bearish as far as the daily perspective is concerned, which is the same as the monthly and the weekly as well. Now with the three all showing us the same thing, we don't expect to see anything else but to see price drop to the downside. And so we will be looking out for bearish trading opportunities in the market once the market opens on Monday. Now dropping further down to the 4-hour time frame, what we see is that price has formed what looks like some kind of a head and shoulders pattern, this being a left shoulder, this being a head, and now this being a right shoulder, and price has just broken below this neckline. So we could see a little bit of a retracement to the upside, perhaps to come and retest this area which is above the neckline before we can see a drop to the downside to complete the shoulder, the head and shoulders formation. But at any rate, it's all bearish. So that's analysis for today. And so if you're a swing trader, you could look out for swing trading opportunities on this 4-hour time frame. If you're a day trader, you could drop down further to the 1-hour time frame and look out for day trading opportunities once the market opens. But if you're a scalper, then you could drop down further to the 30 minutes and 15 minutes time frames and look out for quick scalping opportunities once the market opens for the new trading week. Thanks for watching, and if you're new to the channel, kindly subscribe, like and share this video, and also turn on the notifications so you're alerted every time I post new content on the channel. I'll see you again.